All right, so this is the second part of the exam review for Accounting 3303. Go over some multiple choice here. Since indirect costs cannot be conveniently or economically traced to a cost pool or cost object, the management accountant will assign them by means of cost allocation. Number two, all indirect manufacturing costs are commonly combined into a single cost pool called overhead. Number three, any product, service, or organizational unit which costs are assigned for some management purpose is a cost object. Number four, which one of the following is not a cost driver? Um, it would be an executional cost driver, is not a type of cost driver. And then five, the cost driver in which actual value of the cost driver is expected to fall is called the relevant range. On that. All right. Number seven, the cost of goods that were finished and transferred out of work in process during the current period is cost of goods manufactured. Number eight, assuming the following information pertaining to Cub Company. We got prime cost of 195,000, conversion cost 221,000, direct materials used 85,000. Direct labor would be so we take the prime costs of 195,000. Prime cost is direct materials and direct labor, and then we subtract the direct materials used, and that would give us 110,000. C on that one. Okay. Number nine, the following information was taken from the records of Elliott Manufacturing Corp. Unfortunately, some data were destroyed by computer malfunction. Um, so we've got sales revenue, finished goods inventory beginning, finished goods ending, um, cost of goods manufactured. So what they're really asking us to do is reconstruct that. Let's see, our sales revenue is 58,000. Our cost of goods sold is unknown. That's what we're actually trying to look for. Um, and our gross margin here is 25,000. So 58 minus 25 would be 33,000, and that should be our cost of goods sold. C. Okay. The three attributes of cost information include accuracy, timing, and relevance. Which of the following is normally considered to be a product cost? Selling expenses are not, present expenses are not, miscellaneous are. So that's going to be a manufacturing overhead because it's the factory building, and manufacturing overhead is a product cost there. And then finally on this page, certain workers are assigned the task of unpacking production materials received from suppliers. These workers place materials in a storage area pending subsequent use in the production process. The labor cost of such workers is normally going to be indirect labor or overhead. Prime costs and conversion costs have what element? Okay, so prime costs are direct labor, direct materials. Conversion costs are direct labor and manufacturing overhead. And so what they have in common is direct labor. That. Okay, so we've got this Tierney Construction recently lost a portion of its financial records in office theft. The following accounting information remained in the office files. Okay, so what we want to know, let's see, direct labor costs incurred to the period 2.5 times the factory overhead. The CFO of Tierney has asked you to recalculate the following accounts. What should the amount of finished goods inventory on December 31st, 2016 be? So on January 1st, it's our beginning inventory is 31,000. Our cost of goods manufactured is 98,000. Add those together, we get 129,000. That's goods available for sale. This is the cost of goods manufactured. Then our ending inventory, we don't know that, but we do know cost of goods sold, and that's 80,000. So we subtract that and we get 49,000 as the ending inventory. And so D on that one. The ideal criterion for choosing allocation base for overhead is the cause and effect relationship on that. What's going to be the driver on that. Number 17, under job costing, factory overhead are assigned to products or services using labor or machine hours, which are those are going to be volume based. Cost drivers. Which of the following documents records summarize the cost of direct materials, direct labor, and factory overhead on a particular job? That's a job cost sheet. E. Which one of the following is used in production department supervisor to request the materials for production? That is a materials requisition. And 20, which of the following is the amount of factory overhead applied that exceeds the actual factory overhead? And that would be overhead. Okay, that's our multiple choice from this test. Then we get to some problems. We had a blank page in there. Okay. So Young Fashions Company produces children's clothing. During the current year, the company incurred the following costs. So we want to do a cost of goods manufactured and a cost of goods sold. So we've got our direct material. Let's see. Start with direct materials and our beginning inventory is 220,000. Our direct material purchases are 850,000. So we're done with that one. Add those together, 1,070,000. Then we subtract off our ending inventory. That's 155,000. And so direct materials used is going to be 950,000. Then we have direct labor used is 525,000. Okay, then our overhead is going to be direct here. So we've got the factory rent. I'm going to do these here. 144 for the factory rent. That's overhead. Factory utilities of 120. That's done. Indirect materials of 106. And we've got indirect labor of 90. So those are all overhead. And we got 0 there. 7, 6, carry 1, 460. So manufacturing overhead is 460,000. Then we add our beginning work in process inventory is going to be 160. This will be total. Oops, slide that down. Total manufacturing costs. Add that all together. 915. $2,060,000. All right. Then we subtract off our ending work in process. That's 128,000. It'll be 1,932,000. That'll be cost of goods manufactured. Now you could continue here for the cost of goods sold. I'm going to move it up over here. And so we've got the finished goods beginning inventory of 320,000. Cost of goods manufactured. I just moved this up. 1,932,000. Add those together to get goods available for sale. And then we take the ending finished goods, ending inventory, and that's 310. And so our cost of goods sold is 1,942,000. Okay, so that's that one. Number 32. We've got Warren Company uses a predetermined overhead rate. Overhead for the next 12 months is estimated to be 480,000. They apply overhead as a percentage of direct labor costs. Direct labor costs are expected to be 400,000. So our rate will be 480,000 divided by 400,000, and that will be 120%. 120%. 1.2 without the percent. During the year, actual direct labor costs amounted to 520,000. So we've got 520,000 times 1.2. That means that 624,000 of manufacturing overhead was applied. actual overhead was 605. So we are 19,000 over applied. So that's number one. And then number two, prepare the journal entry, assuming that it goes to cost of goods sold. So if we're over applied, that means that we're going to have manufacturing. If it's over applied, that means this is on the credit side, so we have to debit it to get rid of it. Manufacturing overhead or overhead control. I like control, but yeah, that's another story. Most accountants prefer to be in control, so nothing mystical there. Manufacturing overhead control of 19,000, and then cost of goods sold is 19,000. All right, so that would be that one. Oh, looks like we got another blank page and another blank page. All right, so that solves that.